Hello traders, this is Michael Huddleston with the Inner Circle Trader Pro Traders Club entry for July 12th, 2011. Okay, I want to thank you guys for joining me last night on a live edition of Pro Traders Club, but unfortunately, for whatever reason, I forgot to engage the microphone in the software program I use to record my screen, so you all got a chance to see and hear everything live, but unfortunately I was unable to capture the audio. The video was perfect, but the audio was absent, so I have to kind of like go over everything here and try to condense it. And I apologize if you are all expecting to review that session last night. I apologize. It was inadvertent on my part. I thought I had the mic on, but it was only on for broadcasting purposes, not the recording, so it was in my haste, I forgot. So, okay, moving along. This is the fiber, okay, and this is leading up to Friday last week, going into a non-farm payroll. And we have midnight New York Standard Time. In GMT, it's denoting a midnight time frame for me in my local time frame. And these red lines here are basically denoting a Asian range from Thursday going into Friday's session. Okay, we have the initial move up. Okay, testing the Asian range high in here. This is Friday's trading, London opening. This vertical line here delineating 2 a.m. my standard time, which is basically about the time when Frankfurt begins to enter the market. Okay, price trades down after testing the Asian range high on Friday, trades down into the central pivot, consolidates around a little bit, and then moves down to the S1 level. Okay, and we made a very nice inverted hammer. Hammer. Price bounces off of S1, comes back down into New York opening. Okay, and I know I been very vocal about not trading non-farm payroll, but I have I think it was 3 individuals that had sent me emails asking me if the methods still apply to report days like non-farm payroll. and to illustrate the fact that they still do work even on a high volatile market release like this one that happens once a month, every first Friday of the month. Non-farm payroll comes out, and generally I just let it move and trade without me. But this one I did take action just so I could illustrate the purposes of the tools themselves still being applicable to high volatile news releases. Okay, and here's basically what I did for the fiber. We made a low, traded up, going into the time frame that I watched for New York Open. We traded down into it right on the specific time when I watch, which is 7 a.m. my time. And I went long in here on an optimal trade entry, okay, and price right above S1 level, right before the numbers were released. Okay, my stop was placed just below here, and as you can see clearly, they came down, took me right out, and went back up to the general area I was entering initially. So while I did see the rejection here, we will look at the cable real quick, and you'll see that that same time frame, okay, the cable was unable to go lower. Okay, so in your smart money tool, SMT divergence, okay, it was bullish here, showing it that the fiber basically just experienced a stop running event, tagged me out, so I immediately got back in initial entry. I think I was off like 5 pips from where I actually got in the last time, and because I had a loss here, all I wanted to do was mitigate the loss, and I took profit right above this high here. So as price traded through here, I got out, so I was able to recoup the loss. I wasn't interested in trying to make a net gain because our concepts that we teach, okay, here's midnight, here's the London high, okay, so price had traded down, and now we are looking for what to take place. We are rallying up, so we're going to look for an opportunity to go short. Well, we had a question emailed asking, how do I use which swing highs and which swing lows when I'm drawing my fibs? And you really want to start with your fibs on previous day's highs and previous day's lows. Okay, so if we have a London session high in here, because remember, the first 4 hours of trading after midnight, New York Standard Time, our belief is, as professional traders, is that the market typically puts in its daily high or low within the first 4 hours of trading after New York Standard Time. So here's the high that was placed in here, and we traded down, so we would be looking for a down close on the day for Friday. So here's the previous day's high on Thursday. So we're going to take this high here, draw the fib down to the low that was made in New York opening. Okay, and we have this Asian range low converging with the 79% retracement level. This is your 62% retracement level, which happens to overlap with the central pivot. And right in here, price worked a considerable amount of time within the optimal trade entry window that we like to look for, getting short. Now there's several opportunities that you could have used to get in here. Trading back up to this Asian range low as a pure resistance play, or we can zero in on this optimal trade entry pattern here. Okay, so now we have nesting optimal trade entries forming in the fiber. Again, now this is actually happening. Here's optimal trade entry again, nailing the convergence of Asian range low and the larger swing optimal trade entry, 79% retracement level. So we have many reasons to get short in here. Also, it's basically at a small round number, 143.40 would be another confluence of events. So let's take this fib out. So getting short again with the trend of the day, even though this is wildly aggressive on the upside, is attributed to the release that was non-farm payroll. Price trades down, does not get back down to this low here, okay, and then meanders and consolidates going into the close of the day Friday. Okay, that was the trade that was taken here. After my initial loss, I mitigated the loss by getting out here on a scout that was counter trend of the day, because the London Open created the high of the day, and now we're looking for the New York Open. Refer back to your New York opening webinar I posted on Baby Pips. All these concepts are covered there in detail. But we have a optimal trade entry in here, getting short with the trend of the day, even in non-farm payroll. Very nice payout in terms of pips. So now we're going to look at going over the weekend. Okay, because we are in a longer term daily swing that we discussed in the New York Open webinar. I was basically illustrating how we are expecting at least a very minimum 700 pip swing, and let's look at that real quick on a daily chart. We are looking at the daily chart here on the fiber. And in the New York Open webinar, we covered this swing here down, and we were referring to the likelihood of, at a very minimum, a 700 pip swing in magnitude from this high down to this low in terms of retesting this low as we traded lower. Since the production and release of the opening on the New York session webinar, we created another optimal trade entry on this high here, pulled down to this low here. Optimal trade entry formed right here, and for a short. So again, targeting that same low here, and which happens to come in today. It was blown out today, but we were covering before we actually blew lower today. Yesterday we were covering in advance that this was going to go lower, so everyone that was in attendance was there to hear me forecast this low being taken out. But if you remember back in the webinar on New York Open, we were already targeting this low here back in this time frame here based on this optimal trade entry. So the focus was looking for shorts. Once these stops underneath the low was taken out, okay, we would have to take in consideration the likelihood of a swing from here up to this high here. Okay, we have the 79% retracement level on here converging with this low. Okay, and if you pull from this low here, we have optimal trade entry here as well. So many reasons to expect a bounce here. So that's why we had, I think, a pretty violent move higher today, even though it was counter trend here. That was the catalyst behind why it did bounce. Going back to our fiber on a daily chart, okay, the short that was taken on here was a position trade that I maintained, and why I've been quiet for a few weeks. Basically letting the trade unfold. And I've covered this before. When I'm in longer term swing trades, I don't like to talk about them. I do leave like little milestones so you can go back and see that there was something that I can refer back to as to why. But it's just a weakness on my part, again, as a trader. I don't like to talk myself into marrying the bias or expected outcome, even though I'm hopeful that the trades will pan out to my targets. I have no guarantee that they're going to do that. So by me talking about it's just going to make me be that much more, emotionally tied to the trade, and it just keeps me from doing that by not talking about it openly. Okay, so getting short here also. Market trades down, holding into the weekend. This was covered in the live session last night. Whenever we have the Sunday gap not filled, that is an indication that we could see continuation, whether it be the upside or downside. In this case, we were looking for lower prices because our break lower on Sunday's gap never was filled, and we are in a longer term swing lower on the daily chart, so price accelerated to the downside. Here is New York Open today. Price trades and slams down into London close for today. I'm sorry, this is yesterday. I'm referring to today. This was Monday's action, rather. I'm sorry. And then we meandered and consolidated sideways, and then moved lower into London close. London open, rather. I'm sorry. Trading lower in here, nailing the low. The daily ADR was about right in this vicinity here today, and S1 provided a means of bounce or support. Okay. Now in here for the fiber, with the exception of this finding a price level, let's look at my other. Okay, when we traded down into the New York midnight time frame, let's put that on real quick so we can see where we're at. London had traded down, and we went right into New York opening, which is here. Okay, so we made it low going into New York open. I was looking at, since we had really come down a great deal in terms of pips on the daily chart, we have slammed down lower into New York. We had made the high in London open, so the bias really would have been looking for a rally up and then an optimal trade entry to go short to retest this low or even break lower. That's how we traded New York open. The problem was, if you refer to the pound, okay, we traded down, bounced up, blew out the low here. Okay, and here's the optimal trade entry I utilized for the cable. Again, same premise in mind. Here's the high made in London open. We traded down, we bounced up. Okay, optimal trade entry in here. Okay, getting short in here. Price moved up a little bit against the 79% retracement level. Penetrated just a few bars in here. Again, this is the 5-minute time frame on our chart, and I was looking for a retest of this low. Price traded down. Okay, once it moved 30 pips for me, I took first profit, moved stop to break even, and because we were looking at that higher time frame on the daily chart, I had a real, uncertainty about whether or not we were going to make another retest this low, because this is pretty strong rejection in here. So as price made my first objective 30 pips, stop moved to break even, and then I looked and I saw this consolidation in here, and it was happening right in the New York opening session still. as we were coming off of this high to this, this low to this high, price trades down into optimal trade entry here. So I kind of bailed on the short here, covered. I only made it like 2 more pips outside of the initial 30 pips that I took out, and I went long in here, and I risked a stop 10 pips below here. And we were covering this actually in Baby Pips chat room today. Hello Goodbye, or as Hello Goodbye is the gentleman's name in the forums. You'll know him by the little Scooby-Doo icon for his avatar. But Wade, as he's called by name, he and I and another gentleman were in the chat room, and I was discussing that this was the trade I was in long. And I said that I was going to use the 158.60 level, and we're going to use a horizontal line to indicate where that is. Okay, and basically it's right above this high in here, not quite above this one. Okay, so getting long here, taking profit here, which was basically expecting the stops to be blown out here. And I really wasn't expecting to see this much move to the upside. So I covered everything out here. I just got out and was happy with the profit. So I made a small profit in here going short, and then buying it here, made another profit. So all in all, it's a pretty good day. I was kind of like bummed that I didn't catch this, even though in hindsight, looking at, we made the low here in London Open. I was looking at this area here, giving me the likelihood of the London having the high in place, and then looking for the optimal trade entry. And I did get a trade in here, but this is the event that takes place when you're eventually wrong. You'll get the reversal day, and that's when you'll get clipped. And sometimes I'm able to catch it in advance, and sometimes I'm not. So this is how you make money even when you're wrong. And it would have been really nice to hold on to this low here and trade up into this move in here. Let's drop our pivots on real quick so you can get some reference points with that. We traded back up to essential pivot, which is fair value. Okay, so we basically traded the S2 level, 1 pivot, mid pivot, 2, 3, 4, 5 pivots were traded to. Okay, in other words, 5 levels were touched today. Numbers were definitely filled today, so that's really, really good. Now, because I was a little jerked out of gear because I wasn't able to capture this, we are in today's action on the cable. And here's 2300 hours. Okay, if you recall, on the webinar for New York Open and in private chats, I've disclosed this also in Baby Pips chat room. Just off the top of my head, I just mentioned it as a means of looking for the 2300 hour shift in flows. That's right here. We have the Asian session trade. Okay, now basically we had a low made in London Open. Market trades up, runs into 1800 hours right here. And I told everyone in the webinar, when you get about 1800 hours and you've captured most of the daily trend, you want to just basically exit there and be content with that. This red line here and this red line here is nice support levels to anticipate a bounce. This level here is actually off of the daily chart, and we'll refer to that in a few moments, but that's why I had this initial run up. Okay, traded up to the daily pivot, essential pivot, and then this is what you're looking for, that initial bump up. Okay, Asian, here's a little tip that I'll give you and a hint for the Asian session tactic presentation. Generally, Asian session has a unwillingness to go to new highs and hold it. Okay, unless it's a news driven event, or if it is a very huge trending day. And I guess today could be classified as a trending day because it was kind of one-sided. Then we had a consolidation sideways. Okay, so we wait for a means of bounce in the direction of the existing trend, which is up. So we don't chase it in here. Now, if you could buy this if you're a scalper, and we're not going to go into how this could have been done because I haven't got to that presentation yet, because it's very risky because it takes a whole lot of things in consideration that I haven't given yet. So I'll just have to leave you with that for now. But we wait for the Asian session to give us a move. Here is the initial move up. So you draw your fib from the low to the high. Optimal trade entry in here. This is the one I bought in here. I went long. I got long at 159.17, and I was looking for this high and this high to be blown out. There would be stops resting above that. Again, with the same premise that Asian session typically is unwilling to run to new highs and continue up. And that means basically expect to move up, blow out the stops, and then pull back into the range is what we have here. If you look at the number of pips, okay, using a rate above this high or this high here, it's 35 pips. And the actual move ran up 42. I was content with 32 pips, so I got 32 pips out of today's Asian session, and I was able to capture a nice swing at the New York Open in here, even though I was wrong with my interpretation of where we were with the London Open making the high. I thought we had placed the high, but it was actually the low was formed on the day here. And then we traded up and gave ourselves an opportunity to get long here. Now, in the same vicinity here, if you look at a daily chart, this actually falls within a optimal trade entry on a daily chart, which I think is the reason why we had this really nice move up. Funds and institutions must have really dogpiled on here. Now, going forward, we had a move up. We've consolidated sideways. Now, this could mean another leg from this point here up to this high. Add that in terms of pip range and add it to this low here and project it up, and we could probably see a run back to the 160 level, which is what I was indicating in the webinar or live session last night, not webinar, but how we trade at 160 here. I would anticipate at least another try to run up there and test it as resistance. It doesn't have to get up there, obviously, but that was what I would expect to see happen between now and London Open. And then the fiber, it had a nice little bounce in Asian session today as well. It was just a little bit more sloppier, and like I said, it did run up, but the technicals really lined up with the cable. You can see it right here. Okay. I did step away from my my computer during the New York Open, and while I was able to capture this move in here and talking about how price had rejected this this level here after running the stops out here, I closed my session in live chat and basically took a nap. If I would have been at my charts, I would have ran this low here to this high, and here's 62, and just below it almost a sweet spot on optimal trade entry as well, and that would have been another indication for me to get long and hold for at least London close, and could have captured a nice little piece of that, trading one pivot to another, which is S1 to central pivot. So that was the action today. And going back to the fiber on a daily chart, the swing that I took on a longer time frame, because I do trade multiple on multiple accounts, I covered all of the long-term swing trade from here. This optimal trade entry in here, I traded, and it was basically covered right at the low on 139.85 on a limit. So that position was closed out there. So pretty good chunk of pips. But in the live session last night, we were covering how this was actually optimal trade entry on multiple levels, and how you could utilize the fractals. And I mentioned that when I say fractals, I'm not referring to this. This is what everybody thinks of fractals. This right here. Okay, they're short-term swing highs and lows. That's all that is. It's been dubbed and named fractals. Okay, but a fractal is anything that is a pattern that looks the same on all time frames, whether it be 1 minute, 5 minute, 1 hour, monthly, whatever it is, time frame wise. A fractal is the same thing that is identified on all time frames. In other words, if I took the price labels off and the time labels off, and I showed you a chart, I could give you an optimal trade entry, okay, and zero down into a lower time frame and zero down into a lower time frame, and you'll see how each one basically still creates a optimal trade entry, just on a smaller time frame, or reverse it on a higher time frame. So while a fractal, in this case a swing high or swing low, can be classified as a fractal, that's not what a fractal is by definition. It's any pattern that is recognizable or identified on all time frames. Much like in the same way, if you study chaos theory, and I'm probably really going off on a rabbit trail now, but just for your own homework, just look at chaos theory and look at how fractals are revealed and covered in that field, and you'll see what I mean by it's not just limited to swing highs and swing lows and these little things. It's not a fractal. That's swing highs, swing lows. Okay, but let's take that off, and I'll show you real quick, and then we'll close this session. All right, this is one. Again, this is a daily chart. Okay, optimal trade entry here, 62 and 79% retracement level. Here's your high. Okay, now watch what happens. I'm going to move the fib. Okay, from this high down to this low, price trades up, optimal trade entry again. Okay, and last night we referred to the technique I mentioned in the the New York Open webinar, using your rectangle tool, just highlighting an area. Okay, and now when we zoom down to a 1 hour chart, okay, you can start to see a smaller optimal trade entry, and this is the concept of a fractal, each one getting smaller and smaller, but it's the same pattern. And this is how you effectively zero in on, here's your optimal trade entry right in here, 62%, 79% retracement level. So now what we're going to do is we're going to zoom in to a 15-minute chart. Okay, here's that swing we saw on a 1-hour chart. Now, see this high to this low here? What do you think this is? Optimal trade entry. Okay, and without doing it, we can drill down to a 5-minute chart and you'll see this one here. Okay, and we'll be able to do it with this chart, so we'll just pull it up with that. Here's your 62% retracement level and your 79% retracement level. Here's your sweet spot, optimal trade entry. So now, on a daily chart, finding all of our reasons to go short based on the longer term time frame and market structure suggesting lower prices, we could get into that short with this area here. We'll use the 62% retracement level here, and we'll say we got in at 145.60, not because we want to have the perfect fill, but we're just going to be using that as a means of entry, and a 10 pip stop above this high here, which means we would have our stop resting at 145.86. So that is a 26 pip stop. So you're risking 26 pips to get in sync with the daily trend. And let's go back to the daily chart. And just for disclosure's sake, I did not use 26 pips. It was 30 pip stop. But I risked 30 pips on this move here to make well, it was actually 570 pips profit. So 570 pips with the 30 pip risk. So that's what you can get using the tools and using the higher time frames and swing trading with it. So all in all, it's not bad. I did disclose also that I started with $1,000 on another account the last week of May, and with today's trading added to it, the account's now at $5,266. So not bad there either. And all I'm doing is using double tap, taking first profit, and then letting it run. And I started with one lot on minis, and I was able to get to 3 lots today. So that's where we're at. And I did have recently a run of 15 trades in the last week, and I had 1 loss, and that was the non-farm payroll loss. So that was mitigated immediately in the same session on New York Open, and then I was able to capture the short going over the weekend, and I put some more money in that account. So I'm just basically using that to highlight you don't need a whole lot of money to start, and that actually is going to be one of my my youngest son's accounts. So I'm going to see what I can do with it and build it up. But I'll refer back to that later on as we build it up higher. But that is tonight's session, and kind of like a condensed version and real quick review of what was covered last night and today's action as well. And with that, guys, I wish you good luck and good trading.